This podcast is for entertainment purposes only and should not be relied upon as the basis for investment decisions. Podcast guests and their clients may maintain positions in the securities discussed in this podcast. Hello and welcome back to the Three Wise Monkeys podcast. It's been a little while between drinks. We took a bit of a hiatus, but we are back and better than ever. But for the last of the season, unfortunately. Yes, that's right. It's very sad news, but after 22 episodes, I believe, gentlemen, we are going to put a pin in it, at least for the time being. For the time being. Could be renewed in future, we'll see. Could be a season 2.
We're talking to our agent about it.
Will we get picked up for a season 2?
Look,
Absolutely.
Definitely write to the publisher, and I'm sure SoundCloud will be listening.
What the hell is going on?
What is going on? Why?
Yeah.
Why? Tell us why, Matt.
Why? I guess we came together a collection of a lot of different projects and taking some time to work on some different stuff.
And we'll definitely be looking forward to finding out what else is on mattjoss.com.
We can chat about that a bit later on. But today we've got
do have some new content for today as well.
We do,
We do indeed. But I think it would also be remiss of us not to do a bit of a stroll down memory lane and look at all of the genius calls that I have made over the past 22 episodes or so. And we can gloss over some of the ones that weren't so genius.
Yeah, we'll have to mention a few mistakes to make it
just to balance
seem
it out.
like we're being balanced.
But to kick things off, Claude, why don't you introduce a new company, which I believe you might have written up recently?
Yeah, that's right. So actually one of the joys of the Three Wise Monkeys podcast for me has been talking about the hidden reports that we've been putting out on ethical equities. I think the first one was Data, which has performed very well since then.
Yeah.
But today I'd like to talk about the Vista Group.
Vista Group. What does Vista Group do?
Well, so actually it's software for cinemas of all things. And this is actually key to the sort of long-term narrative that I have in my mind for this company, because I first spotted it quite a few years ago now and thought, oh, look, it's sort of high retention rate software stock with quite a large market share of the world's cinemas.
I was just going to say, I think we flew to New Zealand for a presentation that they were giving at one stage, Claude, back in like 2014 or something
that's
like
right.
that.
I remember seeing you there as well. That was like early days during that period of our lives. But so we've talked about it between ourselves in the past, but we've never really talked about it openly, or certainly I haven't. Like from time to time, I've published something here or there on it, but ultimately it's one that's flown fairly under the radar in Australia, and part of the reason for that is it is a New Zealand company, and
they just ignore them, these amazing businesses, until they only list on the Australian exchange like zero,
and then we can celebrate them. Then we can celebrate them.
So we love something we all have in common, I think, is that we like New Zealand and some of the companies it produces.
I like this. This is good.
Suck up.
So that's the end of the thesis, guys. And this is New Zealand stock. Woo!
Nice. Strong.
I'm joking on that, but basically, you can imagine it has some of those first features that would have, got my attention, but it has two real big parts of its business, plus I guess a collection of other businesses that aren't profitable that maybe one day will be profitable.
Yeah.
And when it listed a few years ago, it really only had one part of its business, which is this sort of software to help bigger cinemas run their operations essentially, and then they sort of branched into also software design maybe for smaller cinemas, but it was all this sort of enterprise management stuff. Now that is a great way into an organization, but if you look at the actual profits from that part of the business, it wasn't growing that fast.
Because that maturity had a very big market share. I think, was it a third?
Actually more than a third.
So pretty huge global share for a small New Zealand company.
Yeah, exactly.
But harder to grow when you're at that stage, I guess. Yeah.
And so what they've done basically is, as part of the IPO, is sort of bought this other company, Movio, that helps cinema essentially with cinema advertising and cinema marketing. So that's, I guess, a little bit closer to a different kind of revenue stream. So you've got the revenue streams from, your candy sales. I shouldn't even call it candy.
Lollies.
Yeah. Popcorn.
You forget yourself,
sugar
sir.
water, all of those things. And, the scheduling and all that sort of stuff. But you also have the ad sales. And, of course, with the internet being very targeted with advertising, there is now a need for cinemas to have better intel essentially on how advertisers can do well with cinema advertising. But if you think about it, cinema advertising is special in a way because you're there, you're probably with someone who matters to you, often the case, and you're sitting there and you're ready and you actually give your full attention to a massive screen with surround sound.
Yeah.
Like you could barely ever get better sort of penetration into someone's mind.
Yeah, you're not even allowed to have your mobile phone on to distract you, right?
Yeah,
So it's
exactly.
like-
And you can't talk either.
yeah.
So it's really the perfect way to just deliver a message there. Now, I think part of the reason that this company has never sort of become a hot software company is because the hot company is Netflix, right? Which trades on, 1 million times reverse losses or whatever they have.
Reverse losses.
Community adjusted something. For yeah.
And,
But yeah, just to jump in, so Claude, I think that's a really interesting point because a few years ago, it maybe even more than today, maybe it's changed a bit, but everyone was talking about the death of cinema. People just assumed no one would go to the movies anymore.
Actually,
that's completely untrue.
I jump in there because I did a few years ago now, big deep dive into the cinema industry because Event, which was formerly Amalgamated Holdings, listed on the ASX, own a bunch of, they own the Event cinema chain. And it's fascinating because although we've had Netflix and that, it's not so much, you don't go to the movies per se to watch a movie. It's more about going out. It's more the experience. Like, can you do something cheaper and more cost effective? Yes, absolutely you can. But if you want to say to your sweetheart, hey, come around and sit on the couch and I'm going to, dial something up on Netflix.
You say to your sweetheart, you get your best
No,
girl
just-
around.
you just text
You
on,
get your horse and your buggy.
you just text on Tinder, Netflix.
What's this
chill.
Tinder you're talking about? But the thing is, and despite prices going up, and you think, oh my God, it's $25 for a ticket, it remains one of the cheapest forms of out-of-home entertainment that
Yeah,
you can have.
absolutely.
Even with 99% margin popcorn and soft-serve drink
And
as well on top of that.
And I think Avengers just did in their opening weekend 1.2 billion US. So I guess people are firmly agree
In
that it's
one
back.
week.
So,
Where else can teenagers smuggle some
where is this
whatever
going?
it is to put in their Coca-Cola
Yes.
and
Yeah,
sit
yeah,
next to the girl they've had a crush on for 3 years
Yeah.
out of sight of everybody else.
You're so right. It is the
Very good.
experience. And man,
Cool.
if we had more time, we should so do a Disney deep dive one of these days.
Yeah,
'Cause some
yeah,
of their
yeah.
purchases have been
Yeah,
massive,
absolutely.
but I
But anyway, let me
Yeah,
say
sorry,
this.
I
So
segue.
actually, when I first bought this, now I've forgotten the date, but it was actually, the share price was quite a bit lower, but it actually was flat or even down for ages after I bought it. I think it's the
probably early 2018. Having a look at the chart because
No, I bought it way before, back in the early days. It was when you were talking about an event and when Matt was also first introducing us to these ideas about how software gets the most profitable. Can you
Segment of the
explain that
industry.
idea for the listeners? Just
that software normally captures all of the profit of the industry, all of the
Yeah.
the excess returns on capital.
So, Andrew, you had literally, convinced me, actually, cinema's not going to die. I
Cinema's
agreed
here to
completely
stay.
with those arguments. And then
Yep.
Matt was on there saying, and in any industry, it's the software that gets the best margin. So I was like, man, this is a software company in the cinema industry, which is, in my view, massively underrated. So that's what originally attracted it to me.
Well done, man.
Very good.
It's not
I
actually
wish
been
you
a-
could have
it's-
returned the
it's
favor and
not been
spoke
a
more
great-
about how
It's not been a
Vista
huge one
was.
yet,
It's
but
not
it's
been
still
a
got
great.
a lot.
It's not been a great performer.
Yeah.
It's only really started to capture people's attention recently when this Movio business, which is more on the advertising side, has finally started to show some growth, some strong growth. Now it's got about 1/2 of strong growth. If that can continue, I think it could be exciting. If not, it's probably too expensive now, even though it's not that expensive compared to other software stocks in this glorious raging bull market.
Absolutely. Excellent. Cool.
Speaking of glorious raging bull market, let's go, if we can, gentlemen, right back to episode 1, which was...
Can we have some music, like some chimes or something?
I'll do my best. Yeah.
Sound of a waterfall.
There we go. You're doing
That is the exact sound a waterfall makes.
We thought, let's talk about Kogan. And we put the boot into that massively. And I'd encourage our listeners, of course, to go back and listen to all of our episodes multiple times and tell your friends. And if you went back to episode 1, you would see us talking about Kogan. And we just really went to town on it. And we thought, what a dog of a stock. Who on earth would buy this?
Yeah, you guys really didn't like it. I loved it. You know? So-
How much How much has it gone up since we?
I think it's about 100%, maybe over 100% since
my
then.
memory
We almost
is
got the
that
bottom.
We managed to pick the bottom for our bearishness on episode 1. Starting strong, guys.
Man, my memory, and this is just like maybe self-preservation. I actually thought it went down a lot first before it recovered, or did we nailed
really
the bottom?
didn't, yeah.
Oh, wow.
Not much.
Nice.
Maybe it went down 5%. We're like, yeah, nailed it. And then, yeah.
So what's okay? Let's fast forward to today. What I think. Let me do
To
a
be
quick.
fair, we were also saying that it was bad before when it did
Yeah,
actually
yeah.
go down.
From
It's just
$9.
Yeah,
$9 was always
Still bearish
great.
at 2.
we were saying it at 2 on the other side. It went to 9. It's still bearish. And now
You remember Ruslan and Co were dumping their stock.
Dumping the stock.
You know, we had ridiculous multiples. You had
had-
Amazon Australia
yeah.
just about to enter. And it was like one of those things where, in fact, my piece on Strawman about it was just like, look, I'll give you guys the benefit of the doubt. I think you can probably continue to grow at a reasonable clip for a long time. But even that didn't make sense. So what has changed the market's mind? We have had some pretty nice results between then and now with Kogan. Is that a fair comment?
I don't think they were that good. No.
So why is the share?
I reckon
why
they're
is
just
shares up
back.
there?
You know, Ruslan wants to. He's still got more shares to sell, Andrew.
I think. Well, I from my memory, I don't follow it closely, but
they've increased their debt facility. That's good news for them, right?
I
though?
think, to be fair, their customer count has gone up a lot. I think their sales have continued to grow quite strongly as well. So it's just more of a sentiment change and multiple expansion. But it was sort of like it got too carried away. The pendulum probably swung too far, and now it's come back a little bit. So let's not spend too much of this episode on glorifying our failures. But is it still a pass? Is that fair to say, gents, for you guys?
Still a pass for me.
Yeah, I mean, but you don't have to pat all the fluffy dogs.
You don't. I love that. I'm getting a T-shirt. You don't have to pat all the fluffy dogs. Claude Walker, 2019.
It's like the G-rated version of like a sleazier fund manager quote.
Okay, I'm not going there. Right. Well, what else? What else are some of the reminiscences that
Well, a company that we haven't talked about much on this podcast, Pro Medicus, I think should probably get a mention.
Prometi awesome? Who's got their drinks ready?
So I think that's up over 100%, or about 110% since it was first mentioned, as we mentioned many times. At any point, basically.
I don't know if we mentioned it
Most
that
all-time
often,
high.
did we? Or-
I think some episodes, maybe nobody mentioned it, but certainly I think I mentioned it every
Yes,
episode.
Well, maybe there's 2 episodes.
I
that
mean,
didn't get
I
a
was
mention.
always drinking. Like, surely.
But yeah, just continue to execute. Had some good news. A lot more people getting the story, I guess. What would you say has been the big change?
So again, me and we all own shares. Me and Claude have sort of mentioned.
I have many things to say.
So I'm going to just try and get some words in before Claude does it. So obviously they've had some good announcements and the rest of it. But I think we can all acknowledge that what's happened with Pro Medicus is like an almost unprecedented, certainly unexpected, massive multiple expansion. So yes, great business. Future's very bright. Things are a little bit expensive. In fact, me and Claude had spoken multiple times of just selling down a little bit here and there. Claude famously had a New Year's resolution, which was I'm never selling Pro Medicus again.
Which I also officially announced that I had broken like in February.
Yeah, you made it like
So
5
it's like-
weeks.
But I like what you
and
said.
I put out a blog
Yeah.
post saying, "Hey guys, I'm going to sell." Before I did that as well.
I like how you're like, yeah, that's how long resolutions last. Like, what were you expecting?
Yeah,
Exactly. That's a good length for a resolution.
right on the middle of the bell curve. And today it cracked $20. So
So I shouldn't have sold.
It
If
managed-
I had listened to myself at the end of December,
I know.
I would be better off.
Here's that funny thing. We were talking before. It's like we keep sort of selling down just for prudent capital, like portfolio management, and yet it continues to be like easily the biggest position in our portfolio because the damn thing just keeps going up. I did put out a tweet today basically saying that, oh man, look, you don't want to overthink this stuff, and even though this is the biggest bull signal you can ever get, I did close my recommendation on Strawman, and I will be selling down a few more in the
Oh,
coming
wow.
days.
You closed the recommendation. I
Yeah,
didn't
it
know
did
that.
pretty
There
well.
you
It was
go.
up 110% or something,
Wow.
but it's kind of look. The thing is on 40-time forward sales, not last year. So what sales will be up about 40-something% this year on my numbers, and it's 40 times sales of that. On my expectation of earnings this year, it's more than 100 times earnings at this point in time. So great business, but man, I don't know. I find that hard to get my head
So
around.
the guy that I've been enjoying about Pro Medicus the most today, as it hit, what was it, 23 bags for us, Andrew? It was a very amusing fellow named Jake, and he had a series of tweets just enraged about how much the market cap.
I like them. Yeah.
Yeah,
Thanks,
I
Jake.
couldn't bring myself to like them because so much of my net wealth is tied up in that
What
company.
was he saying? He was angry at how big the market cap was.
Yes, there was I mean, so few like it, and you should never like this. But he says, Pro Medicus now up $93.7 million in market cap today, and then it's a level of stupid I've not seen in a long time.
It's quite fun.
But
when
of course,
people
it
are
kept
hating
going up.
It's
The
hard
next
to
one
justify
was
such a big weighting.
make that 129 million.
He must have had such an angry day.
Correction, like it's
Yeah.
gone up, still going up. The business only generated 45 million in revenue over the trailing 12 months. It has added nearly 3 times trailing revenues purely on momentum today. Totally normal, he says. Look, I can't disagree with the guy, except to say, like, can you feel the burn of someone who did not own Pro Medicus?
Well,
like,
I wouldn't want to imagine it.
who is the guy? Like, why? We've been telling people about this since about $1 was the first time in the forums.
That's true.
I said publicly. I was actually publicly on motleyfool.com saying at 88 cents or something. Buy this stock.
86
We've
it
been
was.
telling
Yeah.
people about this for years. So yeah.
Well, I know the pain all too well because there's been plenty of other like tech stocks that have just gone to the moon. I don't have any Appen. I don't have any Ordinate. So
yes.
I know the feeling.
I think the most important thing to add right now is I've been finding this amusing because I've been selling. I sold today,
Oh, did
right
you?
today
Yeah,
before this
okay.
podcast because I was like,
What is
oh,
it? What, everything? Or
no, just a tiny bit because
Okay.
like I can't. You know,
Everything.
I don't want to be the guy
Everything.
that's like, how is it going up more? Like,
Claude would have to question his identity if you sell everything.
no, I
That's
didn't
it.
sell everything, but I've been like you were saying to me earlier, it goes up a certain amount and you just want to sell just to make sure you're like, you don't have too
Well,
much.
you can't
of
have an
everything
80%
in one
weighting in
stock.
one stock, right? It's
Yeah, so-
ridiculous.
Yeah.
So,
All right, well, should we get the next?
hey, wait,
Yeah,
I'm
that's
getting a
enough
sense
of that.
that Matt wants to move on here.
Yeah. So like,
Should we get the next biggest?
We need to give
frequently mentioned one out of the way.
No,
no.
no,
We
let's save it.
we
Save
need
it.
people to have a chance to
Go
go
let-
and
that's
refresh
right.
their glasses,
That's true.
get a
That's
few
true.
more beer bottles
We all
ready.
know.
The drinking
Okay.
game is not
All right,
over.
all right.
Have a glass of water.
Yeah. So what else should we talk about next then?
Matt, give us one that sung out to you that we talked about previously.
Well, early on, talked about a medical miracle, which is helping a lot of people lead healthier lives.
I
Called
said that was
A2
really
milk.
good. That's the one with the heap of scientific evidence,
Yes,
like
absolutely.
hard scientific evidence.
There's
behind
great stuff there. Yeah,
Is it
so
Elixinol? No. I sold that as well.
so A2 milk is at all-time highs. So it's gone pretty well.
it. May help with digestion.
up about
Please do not
A2
say
milk.
this is medical
So
advice.
I bought this one, I think, maybe even after that podcast. You
Nice.
know? Yeah. I think I did.
yeah, that's
Thanks,
good.
man.
So yeah, it's done well.
Yeah, up 70% or so, but it's just done the same
70%.
stuff it has been doing. So I think it was the market lost a lot of faith, kind of related to the CEO share sale debacle, which happened a few months before.
right.
And it's just kept on ticking along. It's on not even a huge, it's on like 30 to 40 times earnings now, maybe a bit more than that. But for a company that's grown
can't-
earnings
I
at
can't-
50%
I
a
mean,
year.
it has
Right,
earnings,
right,
right?
right.
In
I
this
couldn't tell if
market.
you were being
Like,
serious or not when you say it's not too bad.
No, I don't think so at all.
Okay,
Yeah.
yeah,
So
so
okay.
looking at my dates, I think I actually
Come
did.
back to some of yours in a second.
I did.
Yeah, no,
I
I'll be
did
careful
buy
what I
that
say.
after the podcast. I just
Yeah, nice.
checked then. So good on
Yeah.
you, mate.
And of course, I think it's all fair to say, and we should put this out there, that we
Matt sold me
obviously
on it.
knew that this was going to happen.
We still don't think that
As
it
short-term,
actually
as short-term
is-
traders, this was the crux of our thesis was
Do
going
you
to be a
even
massive...
buy A2 milk though? Like,
No,
would
man, I
would you?
didn't get out of bed for a 70% gain
I
in just
might.
a few months.
It's
No, at home. What do you feed your children?
Oh,
If you do buy it, I would love it.
I don't buy it. I buy organic
milk
milk.
that does absolutely nothing for the vast
All right,
majority of the
let's
population.
get out of this
You can slap me
defamation.
in the face.
Get out of it. Yeah. Yeah,
okay,
good.
but so it's still good.
Yeah.
And the other milk companies are Bellamy's and Bubs. So what I did is bought a bit of each of them. But A2
Yeah.
Milk's my favorite, and that's the only one I haven't
Nice.
been selling. The others went up as well because milk is hot again.
Just
Everything's
YOLO.
hot again.
YOLO.
Yeah.
Everything's hot again. Yeah.
This is us.
Man, if we had not
It's
had
our
peak,
specialty,
this,
it's like we
people will
just-
look back in a few
This
years.
is-
and
this
go,
was the
What
top."
was the
Yeah,
signal
this
to
is
the
the
top of the
top.
market?
Hey,
Like, these
It's when
douchebags,
these
like,
monkeys
doing
have made
victory
all this
laps.
money.
It's good, man. It's the final episode of season 1. It's good timing.
Good timing.
We'll be back at the end of a 3-year recession.
Asking for handouts, waiting in line with our food stamps.
Yeah. So yeah, Andrew, fling us what's some memory lane for you? Thinking back.
Look, I have to mention EnviroSuite, don't I? That was.
No, I don't think you do.
Yeah, I think I do. I very much think I do.
It does deserve a mention
It
as
does,
I think perhaps
absolutely.
our biggest
Biggest
gainer since we mentioned it.
You know, that's true, but it was a much smaller company and much more liquid, so I guess perhaps it's easier for it to go up 160%. Like, it's harder for a $1 billion company to do
I
that.
love that humble brag. That was
Humble
really
brag.
good.
Was
Well
that-
done.
That was I practiced that in the car on the way in.
160%. He's like, just say it like it's nothing.
I think it's
you know?
160%. I know.
And then I had a glass of water, and I was like, that's totally normal in a few months.
I mean, as is typical of everything I do. I mean, that sounds great, but I mean, I held that thing for a long time before it did anything, and it was down like 30-40% at one stage.
Don't have to
but-
tell this part of the story.
Yeah, look, I think it's
No, it's
it's
true.
worth mentioning because so
It's
many
very true.
people think that good returns come like immediately and significantly, and generally they don't. It's more
Yeah.
in the holding and the patience and the sort of the long term thinking that it comes. But yeah, pretty happy with that
Brings
one.
a tear to
Pretty
my
happy with
eye.
that
I
one.
love how you got a good lesson out of that one. Thanks, mate.
I have to say, and I mentioned it on a previous podcast, I have sold down, I think it was about a third of my holding recently. I just got it at 17.5 cents or whatever it was when I did it. It was just a little bit hard to justify.
Yeah.
Prudent. Nice.
I think I
Claude?
was in and out of EnviroSuite. I like bought some for a little while, and then I still hold some now.
Good on you.
But
yeah.
I did ditch some of it, like because I was like, still doesn't
Free
make
money.
Yeah.
Hey, let's
It's
talk
like
about something
there's
that's-
no profit in the actual business yet, but it is on like 10
Dude,
times
it is
ARR or
early
whatever.
2019.
He's like laughing
no
at my 30 times earnings.
No one's
Yeah,
talking
yeah,
about profit.
exactly.
What the hell's
It's
profit
like,
got to do with anything?
a Matt stock, how much money does it make? My stock, let me tell you about its revenue.
Nice. All right, Claude, hit us. What's another?
Can we
what's
talk
a
about something
memory?
that's gone down? And here's another humble brag.
Yes.
How's
No,
the
that's-
housing market gone, Claude?
Yes,
we
hey,
talked about
good
that?
one.
Yeah,
hey,
nice.
so like I own a house, so that's great.
I didn't mean it like that. I mean,
No,
I think
actually,
we
it doesn't
did
matter.
it-
My house is mostly trees, so I really
Yeah,
don't care.
and the
Let it
trees
all
have
burn
continued
down.
to
Not
grow.
the trees, the housing market.
Do not burn it down.
Please don't burn my
Specifically,
trees
do
down.
not
I
burn
really
my
love
trees
them.
down. Nice. Yeah, so we talked about that a few times, and it has continued, right? So housing's down, and everything's just continued to soften.
it actually
so
it
we'll
feels
see what happens.
it's like it's the property markets move much slower pace compared to shares, and so
Yeah.
the peak was actually in 2017. And I want to say at least in Sydney, it's down about 10-ish%.
Yeah, over
from
that.
the
Yeah,
top.
I think.
So actually, no, it's
12,
about
14.
12.
Is it not
Yeah.
strange that like the housing market, which is so surely linked into our economy, or so I've heard,
Yeah.
and
Fair
is
comment.
like going down, and the stock market's like,
It is an
Whatever.
interesting
Party!
combo. That's a fair point.
There's
Yeah.
something that's to be said about that.
this is like the day of our smugness, like maximum, like everything that we've been like positioning ourselves
pride
for.
before
Yeah,
fall
exactly.
is the
I'm
moment.
I'm
Yeah.
starting to get scared. I was just like
Maximum hubris.
riding over here today, and I thought, some guy said some quote about being greedy when it was fearful, something like
I
that.
think it was greedy when he's greedy.
Greedy. People are greedy,
Be
be more
greedy
greedy.
and not fear. I can't really remember
nice.
the quote, but I've heard a lot of bag holders say it when they were like down a lot and still buying shares in some terrible stock, and I thought that's a terrible quote.
That's awful. That's awful
But maybe this is the time when we should be a little bit fearful. That's what I was thinking.
Yeah.
So, if the housing down is a bit cheaper than what it was, are you guys out shopping around for a property? Or
I
is
could be
it-
buying a property at some point, but it won't be because I'm trying to time the market of property. It's because I like not having a landlord.
Do you,
so-
whoa! You want a property for shelter, dude? This
You're
is
in the wrong
Australia.
country.
Man,
Yeah, like-
I don't know how they do things in New Zealand. but-
Mate, unless you're a baby boomer, that is not okay. Like,
No, don't do that. This is how it works. So you buy a property,
Yeah.
you lose heaps of money on it each year.
You buy another property,
and then you flip
buy-
it and 1 or 2 years later for like 40-50% higher than what you bought it for. It's easy
Yeah.
money.
Yeah, we'll see.
Equity, mate.
We'll
Equity.
see. Yeah, we'll see what happens there.
All right. So
Never mind about
no,
that
No
then.
subtlety with that segment.
so basically, I think it's safe to say that, it would be nice if for people my age and all my friends who are not listening to this podcast, but, we went to uni together, if we could buy a house sometime in the next 5 years. So I think it'd be good for the economy and there'd be lots of happiness going around. So I
Maybe
like that.
long term, but I think very bad for the economy.
Yeah, exactly.
Really,
So
I mean,
why are all the stocks up? That's what-
extraordinarily-
Kogan is a retail stock that is completely focused on Australia, and the property market is like going down, and it's up 100%.
You know, another unusual thing, very quick segue, is that typically like markets tend to sort of like around about pre-election because of, you know, all the so-called political uncertainty. But even that doesn't stop the market from just going, woo. So uncharted waters here.
It's a raging bull.
Raging bull.
Glorious raging bull.
What other stocks can we reminisce on? What else have we chatted
what
about?
else we got?
There's so many.
Let's go offshore. Matthew.
Okay.
What do we talk about in the old, the great US of A?
Oh, yes. So
okay,
Facebook.
good
Yeah,
idea.
yeah. Talked about Facebook
Yes,
thesis.
I love this story.
It was largely driven by extreme cheap valuation.
Yep.
So it's up about 30% since then, just because the company hasn't gone bankrupt and it's
I
had so
love
much hate
that
against
Matt's like Facebook thesis, which is like supposedly a great sexy tech stock. It's like, yeah, it's a shit company, but it's not as bad as, like,
As everyone
everybody
expects.
thinks.
Yeah, that's true.
Well, it's kind of, it seems sort of funny. Like if you were to say this, you know, a decade even, or a couple of decades ago, you say it was what, 25 times PE when you were talking about it. And
About what? Facebook?
Facebook, wasn't it? And we were talking about how crazy cheap that was. I mean, is that not a sign of the times or whatever? And this is a company that was still growing.
Oh, yeah, when we talked about
When
it.
we
yeah,
talked
yeah.
about
Meanwhile,
it,
the one I
Yeah.
liked, Google, is like pretty much gone nowhere. I think it had
Really?
a bad quarterly as well.
Google's strong for the long term, though. That's a different kind of
Very
different
strong.
kettle of fish. But
Yeah.
anyway, I've sold Facebook actually just recently.
That's
so
that's a news flash, guys. So
yeah.
if you're a Matt Joss blind follower, as I am,
Solid strategy.
then,
Solid
you know.
strategy.
But yeah, so it's up a decent chunk, 30% or so. I don't think I'm not calling doom on it by any means. It's just it was very cheap and not quite as very cheap now.
Yeah.
The core, I don't like the core network. I think it's collapsing. I think everyone kind of sees that. But I kind of read some more stuff on social networks as I tweeted about and got a bit more bearish on the stuff.
I think I would love to.
So how do you feel about like just the impact of, say, social networks generally and Facebook in particular on the world?
Good question. I
Bearing
actually
in mind
think
that one of us is trying to start a social network. So please, please try to be nice about, you know, they have some positive.
I do genuinely think net positive currently, but I mean, depends. It could go worse. Definitely.
I think
and
it depends on
definitely
the
they-
network to network.
Yeah,
Sometimes if
yeah.
one good network came and killed a terrible
If only there
festering
was some
network,
great
Hey.
network,
like it.
that'd be great.
high quality discourse.
I think what was really
Strawman.com.
interesting. We don't have time to do it, but I was listening to a really great podcast with Jonathan Tepper, who, speaking of property market. John Hempton's mate came out, did a big thing not too long ago on that. Anyway, from Variant Perception, really smart guy. He's got a book out at the moment talking about oligopolies, monopolies, and pricing power, and was talking about the significance of Facebook's ability to buy up all of its competitors and do some very sort of quote unquote evilly kind of things. And that is a really interesting sort of insight into some of their pricing power
Yeah,
and why
they-
it's different perhaps at this time.
Throw
for
in a
them.
quick comment. They basically spied on all of their competitors through this very dodgy means, and that
which
allowed
was
them
through an
to
acquisition that they made.
Yeah,
And-
through an acquisition, but that acquisition was using
Hope we have a lawyer.
the App Store to act like they didn't really have permission to do the level of spying
Yes.
that they did.
Yep.
Really,
Yep.
It was through kind of a technicality, and then that's going to be blocked recently. So maybe he'll lose
Which
his
I think
foresight.
that led
Right?
to the WhatsApp acquisition, right? It was just like they saw the rise of that very, very
Yes,
strongly.
that's how they knew to
and
acquire
they thought, "Let's
Instagram and
pay." And
WhatsApp.
like a lot of people at
This
the time, you're paying
podcast-
$1 billion or whatever it was for something that makes no money. And like, no, they are killing the company that could potentially kill them 5-10 years down the track. So it's
Yeah, they can see the strategic thing with like Instagram as well, basically.
Yeah,
Instagram is
classic.
the new relevant social media, I guess.
And you
Yeah.
know what? The next one is probably in a garage being worked on by a 16-year-old
I
right
have
now.
yeah.
You're older than 16.
Well, I hope
I'm
so.
much older than
But the
16,
thing is-
my friend.
but your
I
garage
think-
is not.
So I would.
I just look 16.
I think I said it when we talked about it the first time, but basically, there is evidence that like something like Instagram has like quite negative effects on people.
Yeah,
In terms of
yeah.
teenage boys and girls. I mean, basically, from what I hear, I don't actually have Instagram, but you know, a lot of men and boys just have accounts basically so they can see pictures, and then half the pictures are the women in their lives like trying to look as sexy as they can.
Oh, it's depressing. Yeah.
So, I don't know how great that is. Whatever.
Man,
Yeah.
that's,
Anyway,
that's
I
a
sold
whole
it,
other
so-
thing. Yeah. What were we talking about?
Okay, stocks.
Stocks.
Oh yeah, that's what this podcast's
Stocks.
about.
Yeah.
Okay, I've got one.
Oh, yeah, go.
So
go.
this was another hidden report. We're going to try and race through all of my...
Don't race
ethical
through it. Let's
equities
relish it.
bragging.
Final episode of the
so
season.
this one wasn't written by me. This was Matt Brazier who wrote this one on XREF, which is
Shout out to Matt. Yep.
basically a company that, you know, does these reference check things. Now, since that time, the share price has done really well. And they
Awesome.
put out a quarterly today, which I did not find particularly impressive.
I saw shares down a little bit, 6% today, but off a very high level.
I don't think it was that bad.
Okay.
But anyway,
Yep.
the point is, look, it's up 40% since we mentioned it. It's up 40% since the hidden
Excellent pick.
report.
Yep.
But I'll probably be doing an update on this, which will be there. I don't think I haven't sold any, but I wasn't super impressed, and the share price is up 40%. So I think, I'm sort of on the fence on this one. It's not delighting me, but at the same time, I'm not like super angry and being like, I'm going to sell my stock and badmouth it on the podcast.
Do you think, I was going to say, do you think you'll write it up for ethical
I will
equities?
definitely. Yeah, I'll definitely do a follow up on that one to say my thoughts when I've honed them a little more. But I'm thinking I'll stick with it. It's still growing. It's just not as quickly as I would like.
If someone wanted to follow this research, how would they go about it, Claude?
They can Google ethical equities.
And then they should enter their email address. How much does
Yeah,
it cost to be a member of
send me-
Ethical Equities?
Well, right now it's free, but
Seems like good value.
I'll tell you,
Seems
one
like
day it's going to
crazy
cost
value.
money, and then the people that don't pay will not get the good stuff.
Yeah, I would
That's
say
how it
very
works.
good value even
Nice.
at that point, my friends. And make sure you do that. Heaps of good content on there. Some of it contributed by yours truly.
Yes, actually, that's a great segue into nanosonics.
Nanosonics!
So, background here. Andrew has been someone who encouraged me about nanosonics from the very beginning.
Yeah.
And as a testament to those many years ago when you originally for Hidden Gems put it on the scorecard quite a low price.
90 cents? No,
A bit higher than that.
Okay.
But I can't really remember,
that's
to be
just my
honest.
board.
Whatever. But maybe it was lower. Anyway, point is, you did very well with nanosonics, and you've been covering it for ethical equities.
This is so well scripted. This
Twice
episode.
you've covered it on the website.
Very
And
nice.
I
Please,
was definitely not
please you
fishing for
tell us
that.
about nanosonics.
Well, Nanosonics is one of those ones where I think it's up about 70% since we mentioned it
Strong.
on the podcast. Again, totally knew that was going to happen.
So that's actually a good one. 70% is not bad in like a few months.
Far. I mean, this is such crazy time. I'm really cognizant of how crazy things are at the moment.
Can you believe people were short selling that when we were like,
That's
Yeah,
right.
I
It's
do. I
part of
remember.
the thesis,
that
right?
would
A short
hurt.
squeeze.
Exactly. I wonder how they're feeling right now.
Do you know what's really creepy? My phone was on silent, and the message notification that went off was from Facebook.
Holy shit. Shut it down,
They're
man.
listening at all times.
The Zuckerberg drone is
Turn it
coming.
off.
It's really weird.
All
Nanosonics. Look, I think I mentioned on a earlier podcast. I actually sold some down to. I think I want to say about actually a reasonable chunk, about half or something.
Before it went up? Or
No,
recently?
actually,
Okay.
it went up a lot, and then
Nice.
I thought, wow, great company, kicking goals, still really like it. Everything's sort of going to plan, but very very high multiples. And then and this is a good tip for players at home. Whenever I sell something, just back up the truck, right? Because you're guaranteed that
I
thing
was
is gonna
very
fly
surprised. I have been
afterwards.
extremely surprised, but I think we've finally I did notice the other day that short interest is starting to finally give way. I think we're finally starting to see, I have no idea what's causing this massive bull market in these growth stocks, but the valuation to me is really hard to get to.
Here's the thing with and you can cut and paste this comment to a lot of the stocks we've talked about. It's not as though in trying to come up with a valuation, I feel as though I've been conservative. I feel as though I've been really ambitious. In fact,
And you're still not getting there?
optimistic. I'm saying, actually, and then I think when we were talking about valuation techniques, I tend to not just do one. You do a few to sort of stress test your thinking. And I was like, well, let's say for the sake of argument, it does go up 50% for 10 years non-stop and that the margins stay really high. And, you just do all these crazy assumptions just to test the thinking. And even then on some of those things I still can't make this current valuation make sense. The only way it makes sense is if in another 5 and 10 years time, the market is also at that point happy to trade at very unusual, atypical kind of multiples. So another case of great company, kicking goals, still got shares, very happy shareholder, hope to own it for another 10 years. Would I be encouraging other people to buy it at this point? No, I wouldn't.
Yeah, I actually took a tiny bit off the table, or some amount off the table a while back, but it's a great business. But
Great business.
as with Pro Medicus, great business, but I don't know how the valuations are getting achieved right now, and if are the people buying actually valuing the stock, or are they like NAN is going up in a
absolutely.
Do you know what the reverse of this is going to be? I reckon at some point in the future, I wouldn't be dumb enough to put a date on it. We'll be in a different kind of market environment. Prices will be falling, and our conversation will be, oh my God, can you like Pro Medicus was so cheap at $8, you know, and now it's $4. Like, how has it got like this is crazy. How much lower can it go? It'll be the same kind of scenario in reverse.
What a hellish world.
It is.
I
It's
don't
crazy.
think
That's markets for you.
I struggle to believe Pro Medicus will.
Well,
ever go to
that was a
$4.
bad example. That was a bad example. Matt,
Cool.
what
Yeah.
else
Well,
first?
you touched on
But you have
the
to drink though,
valuation.
even though it was a bad example.
You
Sorry, Matt. I apologize.
Have people got their beers ready? Are we
yeah.
ready for that? Yeah.
You touched on the valuation segment, so another kind of segment we did not just stocks, so like the inflection point stuff was quite
that
cool.
was a
I
great
thought.
one.
And
This is actually one of my favorites.
Me too.
favorite topic. So yeah, so that
Good feedback.
companies. Go on.
Sorry, I just wanted to say I like generally try to be like, oh, as with Matt Joss's theory of inflection points, as just like a general reference. I'm
Too
trying
kind.
to put that into the common parlance.
Yeah, and so the company that was mostly talking about relation to was PushPay tipping into profit, but any company tipping into profit can be an example of an inflection point where the fundamentals in the future are going to be radically different to the recent past. And I think, Claude, your Webjet thesis was very similar to that as well. A
It was like
company that had
it was
a
like
hidden...
a hidden inflection point.
Exactly.
But so basically, since you convinced me of this idea, I've just been really just constantly trying to find inflection points, because what really sold me on it was the stuff about the brains.
Yeah, the way that we process exponential growth.
Maybe just
not being
go
able to
over
do
that. It just real quickly.
Yeah, essentially that we've evolved for linear processing. So like projecting whether that lion is going to run towards us or it's going to run
If its
somewhere
speed
else.
is going to double
Yeah, yeah.
every
So
meter,
if you
or
just-
is it just
so-
gonna,
Exactly.
I couldn't be sure if this logic's true, but if you just assume it's true and then look for stocks that are going inflection points, I have seemed to notice that that's been working for me lately.
Yeah, it's like it's a bias, right? It's something that is often it's like a good area to fish in, I guess. It's not
Yeah,
not
it's
a
maybe
guarantee
not the longest
because
term
eventually
thesis
people
I've
can
ever
get
heard.
too overhyped about it. Yeah, and it allows you to get potentially an entry point into some very good company.
Yeah, it's
Nice.
Yeah,
I was going to
that's
say, I said to you
perfect.
guys before, I feel, and this is totally anecdotal, and very self-serving, but I feel as though I've heard, since you sort of started talking about it, I feel as though it's more in the zeitgeist.
We gave it the bump.
I actually think we may have invented this whole idea.
Whoa. But, you know,
Yeah.
we certainly were certainly
It could be like
early
you buy
supporters.
a
Let's go
yellow
with
car,
that.
you see yellow cars.
Because I know we have
yeah.
listeners from the US as well, so
Yeah, spread the word.
they'll be claiming it. For them.
Yeah, and so the main company that I talked about that with PushPay, Claude said was flat. It's up about 20%. I was teasing me out.
20%.
It's
is
so
that
pretty
all?
boring.
I mean,
But hopefully,
flat-ish.
I think that it's still playing out. So it's still, we'll see. They're about to release earnings
That's a
in about 2
30%.
weeks.
It's actually
Yeah,
30%. No, that's
Yeah,
good.
yeah.
Um,
Yeah,
take-
happy shareholder with pushback, definitely.
Yeah, so it's an interesting one, and I'll be writing a follow-up on about inflection points, about a more exciting one. The last time was about like value investing inflection. Next one will be about the growth and tipping past the exciting part of an S curve. So
And if someone wanted to read that high quality work and much other high quality work, Matt, where would they go?
yeah, you can check
Matt
it out
Joss,
at
where would they go?
mattjoss.com.
Or you
would be the place
just
to
Google
follow.
who and where is Matt Joss? How may I find him? And you'll still find him.
JOASS.
Yes, absolutely.
And that's the
Yeah.
key, actually. People,
Yeah, cool.
That's good point, Andrew.
Sign up, register.
Moving on.
Can we do it?
Well, can we move on? Or
I think, yeah. Move,
Yeah.
let's-
Can we
Well,
do it
also,
again?
I would like to add one thing on
Yeah.
PushPay, which is, as people constantly ask me about what stocks they should buy, just as I rock through life,
just walking down the street.
I would actually say PushPay is one of the ones that I can still quite like at the moment, because I feel like everything has got an absolute crazy valuations, and PushPay is not super crazy.
Yeah, it hasn't run up as much as the others.
But I think it's
Yeah.
on a similar multiple of recurring revenue.
Be about
than say
7,
Envirosuite, for
7, 8.
example.
Yeah.
Yeah.
But it's closer to profitability and has US revenues. And
Much bigger top line.
Yeah.
yeah.
100 million or so
Yeah,
US.
yeah.
So yeah, cool. And I think they'll be probably going to do an acquisition of something that could be pretty meaningful. So that gives another opportunity for some new stuff. So we'll see. We'll see if that comes out over the next few months potentially.
It's time.
Yeah.
It's time.
It's
And
time.
It's a
time.
New Zealand stock.
Release the catapult.
Catapult! Another listener, quote unquote, favorite. If they, I don't even say
They love to
that.
hate it or they love it.
Oh man,
What a ride!
What
Huh?
a ride!
What a
Catapult
ride.
has
The
been.
highs, the lows.
That was very early
lows.
on. The lows.
Lows.
Lows. That was
have nothing
episode
to add.
2. That was episode 2. The same time, in fact, we did inflection points and push pay and Digger Data, which we should mention as well. Yours truly said Catapult. I think it looks really interesting.
So that is actually, to my surprise, actually up since we first mentioned it.
Let's put it in perspective. It was $1.10-ish, I think, around that time.
I thought it was high. Honestly, I was surprised when we did the maths today and found it was up like 10 to 15% or whatever.
10 or 15% since then, so that's okay. It's probably just in line with what the market's done. So an
It's
index
still definitely-
investor would have got about the same. But it did get as low as 60 something cents in there, so it was pretty brutal.
Tell us the story. Give us the blow by blow.
I'm not going to bore people with it. All I'm going to say is
No, they're drinking. They're fine.
They're
Mention
fine.
it as much as you want.
Okay, make sure your glass is full. Look, it was always a case of a great product, a great opportunity, a legitimate market leader, with some management that I think we can all agree were not executing well, with some acquisitions and some segments that were not living up to their full potential, with a market that was getting very impatient with all of this kind of stuff that, it's not great now, but it's going to be great soon, and then no. And we had CFOs leave. In fact, we had 2 CFOs leave.
I think that happened, wasn't it, the day after? So you get a lot of credit here, though, because you really backed up on it at like 80 cents or something.
72
We did another
cents.
thing,
Yeah,
and you're like, yes, I'm
yeah.
still on it. And we're like, why are you
Yeah,
still doing that?
I
And
was-
then the day after, which is like the day the podcast came out, the CEO resigned.
I
So like
know,
you
it's
just
like,
released,
come
like, can you
on.
imagine
That's
the
how
worst
powerful
thing?
the podcast is. Literally, before we even published
True.
it,
No,
he
no, no,
heard
no. He
about
heard it.
how we were going to be like, Catapult.
This is what you
bring
need
it
to
back.
do.
Yeah, like,
Yeah.
you need to get rid of the CEO. And then, like, already
He's
gone.
like, I'm out. Yeah.
I think here's the thing. I think this is to be taken with every single company, but Catapult's a great example. Is that you can? It's very, very hard in the share market to distinguish between what the business is doing and what the market's happy to pay for a stock. And so you have Catapult with all of these problems and yet a little bit of opportunity as well in there. And really since we started talking about, in fact, the year before that, there was obviously news of a material nature that came out in dribs and drabs, but the broader, longer-term picture never really changed. And so we could argue about how much we all thought that was worth, but the market went from, and over that time frame, from $1.60 to 67 cents, now back up to $1.20 something. My case was always, even when it was at 72 cents, I had no idea it was going to bounce, but it was kind of like, yes, it's terrible. It's probably worse than terrible. There's a whole bunch of
I love
problems
that that's
with
the
this.
bull case.
But
Yes, it's terrible. It's
we
probably worse than terrible.
We joked about it at the time, and it was just like, man, this thing was on like 2 times recurring revenue.
I know,
like,
but it
this
should be
is
higher,
like-
right? Everything's trading on like 20 times.
So when you've got 20 times recurring revenue business, like, is this crap? Yes, it is crap, but there is
But
a
how-
core of a business here that does not deserve to be traded.
I agree.
at
Look,
this
I
level.
could even imagine myself buying back into this. So like when I did my like takedown piece on ethical equities, it was above the price it is now, right?
Nice.
And they now have a bit of change. I'm not necessarily convinced that the change is actually the change that's required.
Not a lot's actually changed between 70
Yeah.
cents and now. That's the other crazy thing.
But if
right?
I were convinced that the change that is required were to happen, I could definitely buy back in at this at 2. Because like if you actually had the respect of your shareholders, you could get a much higher share price because they would not be constantly trying to sell every time they get the half the opportunity.
Yeah, totally.
Because everyone's like, oh, I'm stuck in this company.
So I had a double recommendation position on Strawman, and I actually closed one of those today. So again, it's the case of, again, not a lot's changed with the business, but it's 70 cents. You can like, wow, there's a massive margin of safety in that, up 50% or whatever it is now. It's not true, and I think this is where
Is
people
your
make
is your
a lot of
straw man scorecard still good?
It's gone pretty good, about
Nice.
30% up actually.
30%.
I've heard that the
nice.
market's been decent lately.
How
Yeah,
about
is-
Strawman overall, the wisdom of the crowd? How's that tracking?
This is actually- yeah, I don't
should
even-
actually open that up and my usual high level.
that
of
would be
spread
a
ratio.
racy one.
Yeah,
That was
we
a
can circle
softball.
back to that. But you
Yeah,
can actually
just
find out really quickly on
18.2% since inception.
Yeah, you can all go to strawman.com and see that.
Yeah, check it out.
Still, I think it's underrated. If I didn't have to work during the day, I would probably spend more time on
Just
Strawman.
looking at that.
It's
yeah.
it's cool. Like I think I'm not going to segue too much into Strawman, but we're in our 2,150 odd users. We're adding about 80 to 90 per week.
I
We're getting a lot of really good, solid contributors.
Am I allowed to say now? I'm a shareholder of Strawman.
You are, my friend.
A very small number of shares.
You are, my friend. And
but
I was happy to give you an infinite price to sales ratio on your share purchase there as well.
That is exactly the price I like to pay.
It's such a good way to sing in return for that support. That's funny.
Value investor.
Value investor 101.
But anyway, so
Catapult.
Catapult. You stuck with it at the lows. It
Yeah.
got down to 60 cents. It's almost 100% up since then. So well done on sticking with it.
Thank you, my friend.
Hopefully
But
it all works out.
Just to be clear, I would not be buying more at this point in time. I still think what you want to see here is that it was encouraging to see that management, I think, tentatively have got the feedback from the market and the professional funds management industry is like, dudes, get your ship in order. Stop all this dalliance. Reduce
sort
costs.
your ship out.
Sort your ship out.
Fire yourself.
What the ship, man? Like
What the ship?
You know.
Well,
and
this is
so,
I'm surprised that the fund managers, like I know some fund managers have been doing a great job in trying to put pressure on them. To
really
do
good
better.
advocacy. Yeah.
But there's still a certain percent, like ultimately the fund managers could take control if they all just gathered together.
Yeah.
And I just think they need to get and have a nice dinner together and be like, how do we roll the board?
I think the guys have got the message, and we'll see. So it's tentative. Look, if they can get things in order, this thing will re-rate massively.
They need to change the directors. That's the thing.
That is the hard part.
If some of the major fund managers could select directors they know from other parts of their business that are good, they have the knowledge to know how to run a good company.
100%, man. 100%.
And then it could literally go from for however many times sales it is now to 10 times.
Yeah.
Or something like in this market. Surely,
in this market, that could actually happen. So I mean, again, that's a very speculative thesis,
massive
but it's not a buy thesis, but crazier things could happen. Let's talk about Dicker Data, because that's been one of your favorites, Claude. You've mentioned it a few times, and you have done a report on ethical equity.
A secret report.
A secret.
So actually, this is up until Vista Group, this is the last time actually I authored a secret hidden report on ethical equity. That's subscriber only, obviously.
Mm-hmm.
Anyway, so it was actually turned out pretty well.
Pretty well's underselling it.
And I'm happy about that because the guy that sits next to me at work, he also bought some.
Hey, nice. That's got to be an awkward office
that doesn't
environment.
go well, man.
When
you
give someone a tip at work and it goes very badly.
So I'm very happy. It's not the most high risk one, but it's up about 50% since the hidden report, which is around the same time as the podcast.
Fantastic.
And it's a good quality company. Funnily enough, I've got a nice story to tell from our quantitative work about this.
Ooh.
So as you know, there are certain factors that we tend to look at on a high level: growth, insider ownership, insider buying, and was there something else? CEO compensation, right? So this is like quantitative analysis of every company on the world. So I ran this really tight scan, and I had about 7 ASX companies come up on this scan. And one of them was Dicker Data. One of them was another company we wanted to talk about today, Advanced Nanotech. One of them was Webjet, who we also talked about on this.
Oh, man, so much to talk about.
And there were only about 7, and that was 3 of them. Ironically enough, one of them was corporate travel management as well.
Ah, yes.
We should mention is up 12% since we bagged it.
So that's up.
And we did that in the very first episode, and we were negative on it.
Yeah, we were negative, and it's up.
Yeah.
Hey, when you're right 98% of the time, you're wrong 2% of the time.
And it even came up on this scan of companies. So I did this scan, and it had 7 ASX companies, and I owned half of them. We've talked about half of them on this podcast. There are a couple of others which I will one day review on ethical equities.
Dude, make sure you do, for sure.
There's one minor, bizarrely, which I haven't not going to look at.
Before we move on, is still a buy for you? Dicker Data,
I wouldn't say a buy, but definitely like a solid hold. Yeah.
Solid
I
hold.
haven't sold any. And maybe I'd probably even lean... Of all of the stocks on the stock market right now, I think it's one of the better value ones.
Excellent. I'll just jump in quickly because there's a couple that we were unanimously negative on, I think. Experience Co. and BWX. And I think they're down about 20% and
I think
26%.
But can I just say this for Experience Co? If you're somebody who does not believe in climate change, you should buy this stock. In fact, you should put all your money in the stock.
Claude's trying to screw you over for not believing in climate change by putting you in a stock.
No, but they're buying up all of these businesses in Cairns who are going to be negatively affected by the destruction of the reef. So if you're like some genius who has this insight that
Dude, it's perfectly reasonable for average
climate
everyday
change is
people
not
to
real.
know better than 98% of the world's leading experts. Come on, who are you?
You know, I don't know. Like, probably fluoride is bad, man. Like,
That's definitely.
this
and
guy.
the world is
Anyway,
flat.
so the point is, Experience Co. The reason that like it is a funny company is because it is actively has been buying acquisitions in areas that will be hypersensitive to this one single risk, and that risk is that Cairns tourism suffers due to the reef dying. So if you don't think that will happen, this is a great company for you.
Great.
Potentially.
Yeah.
This is not advice, and I would never buy this company. And what Matt said.
Okay. Matt, what do you got? What do you got for us?
That was pretty much the last one that I had there. Oh, you mean
I just didn't
to cover?
Yeah, no.
I will tell this story then. When we talk about my ethical investing, the first time I wrote about ethical investing on a certain forum, I suggested as an ethical investment Pro Medicus. This was when it was like $1.
Pro Medicus, just when you thought your drinks.
But most
Was
of
safe.
the replies to that were telling me that ethical investing was stupid. But
Who's stupid now?
yeah, exactly. Thank you, Matt.
Not too much more for me, I guess.
Well,
Ordinate would be one that I'd like to
Ordinate,
give
okay,
a shout out to.
Ordinate,
We
nice.
all really like that business. It's up about 60% since we'd mentioned it. Sorry. Andrew's
Ordinate is
an
good
owner.
stuff.
Andrew's face. I wish you could see it. I wish we had video of this.
Did you not buy that one? I
what?
thought that was another Three Wise Monkeys,
that
like
was-
in it together, Pro Medicus,
You know what?
A2 Mil.
It wasn't like I disagree. It was just like, that looks really interesting. That is totally up my alley. I should really look at that and I should totally buy some shares. And I just didn't. And they've got no reason for doing it. I just didn't. And it haunts me to this day.
But is it still cheap?
I don't know.
I mean, it
just
hasn't been
psychological.
super cheap for a while.
No, I think
No, it's
probably
the
not
answer.
that
But, you know,
cheap.
it can grow into it if it can
Well, actually,
tap the video market. and stuff
speaking
like
of
that, so.
companies that have never ever looked cheap, was Advanced Nanotech, which you touched on before, which was we actually
good
took
one.
not too long ago. In fact, on this podcast, strawman favorite for a long time. Guys like Winnie, Luke Winchester, if I'm mentioning by name, really solid member, really great investor. He's on Twitter. Make sure you follow him. Picked it really early, gone incredibly well, and just goes higher and higher and higher and higher. And that's definitely another one to check out.
Maybe Winnie could sponsor our next season.
Oh, yes.
With the
With his advanced nanotech.
with his winnings.
Yeah.
When his winnings.
We have to mention. That's a really good company. We've talked about a lot of good companies, but let's talk about another crappy company, which was Fluence, which I put a bit of a plug in before.
I mean, this is a satirical podcast, just for any legal
Well, I think
people.
when we talked about it, I think it was sort of like, it's got lots of hairs on it. But my argument at the time was it was just dirt cheap. And so normally, in fact, almost always, in fact, never without exception, I'm a long-term investor. But it did have, fortuitously, some good results, a bit of a 30% bounce when I am out of that. That is not something that's a bottom draw stock forever. So anyone who's following along and listened to that episode, very clearly the thesis was some interesting stuff about it, but very, very, very cheap. Up about 30% or so since then, and I'm out.
So while I've never been a massive fan of Fluence,
And
mostly because of
reasonably so, yeah.
I mean, the lack of positive cash flow and other things like profit.
Yep.
But one high risk water related environmental stock, which I've always had close to it in my mind, is this one called Foslock.
Foslock, yes.
Which is also similarly, I had for many years the same concerns about Foslock.
Foslock with a PH, if I'm...
Yeah,
Yes.
as I did with Fluence, but on a like-for-like, it still looks a bit better to me.
Okay.
And I do own shares in that one, but I will probably sell them soon because I have no real conviction in it. It seems very high risk, but I like the fact that it basically is a rehabilitation of the environment technology.
Yeah, I do like that.
So don't consider this my view on the value of it. It's just one that I've always been interested in. And it had a good quarter.
Last chance, guys. Any other stocks you'd want to mention before we finish this massive pat on the back?
Nearmap's up 50%. Did we say that one?
Oh, Nearmap. No, we didn't talk about Nearmap.
Yeah.
Oh,
I saw
Andrew owns it, so he wants to
Andrew
play
owns
everything.
Nearmap.
Yeah.
No, okay.
No,
I think we're done.
Well, not quite. I just wanted to say thank you to all of the listeners, our friends,
Yes.
the many investors who said
Excellent
really
point.
encouraging, nice things to us about this.
Yeah.
We're
Yeah.
really, really happy to hear those positive feedbacks because it makes us happy and, like we love ourselves.
Absolutely.
too.
Yeah, it's very nice
Definitely,
to hear.
man. Well
Yeah.
said.
But no, we really love that you guys listened and thank you very much for doing that.
Yeah, thank you. And can I also say thank you to you two fine gentlemen as well for your excellent contributions and thoughts. And
Likewise, Andrew.
yeah, look, I
Absolutely.
think it's been a great experience. It's been a lot of fun. We kind of ticked it off with like, hey, let's just try this for a bit and get together on a Tuesday evening and talk stocks, have a beer or two. And well, Matt has a cordial, me and Claude have a beer. And, talk,
That is true.
talk
That is
through a
actually
few
true.
stocks.
I don't
And it's
drink.
been really great. I think last time I checked, we got about 2,500 downloads a week, which is not a bad effort
Not
for
too
something
bad.
that we've
Absolutely.
never really
So, thank you very much.
pushed
Very
as much
privileged
as
to
we
have,
should have.
Fun
so many people
times.
listening in.
So
yeah.
what's next? Is there anything on the horizon?
Well, I guess you guys are looking at me. So, yeah, we'll keep on focusing on ethical equities. We've probably got some plans in the medium to near term to develop ethical equities to something that gives more regular content for the select few and basically just continue to try and pick ethical stocks and, of course,
Excellent.
keep sharing those ideas with you guys as well.
And
Absolutely.
kicking goals and making money.
Asking Matt what he's buying. Just buy that.
No, definitely check out Ethical Equities if you haven't already. By this stage, a lot of very good quality research.
And
was
also,
coverage, so.
basically, we tend to do cross-pollinate our content a fair bit. So
Oh, yeah.
Yeah, absolutely.
you'll
Stronger
if you,
together.
If you
Yeah.
find one of us, you'll be able to find the others.
Yeah. What about you, Andrew?
Just doing the strawman thing.
Doing the Strawman.
Doing
Check
the
out Strawman
Strawman
if you haven't
thing.
already. It's growing extremely fast these days, right? Took that 2,000. Now you're up to.
You talk about like linear stuff before. Is it very non-linear kind of path? So we're hoping that curve continues to go up. My frustration has always been one of the pace of development. It's been a couple years now, and in that time we've had some real success. But I feel as though I could have done it in 6 months if I had the proper resourcing.
Yeah.
It's literally me and a part-time developer and a couple of more recently a few more interns. So it's kind of like
Stop talking it down. It's amazing. There's 2,000 people and
What-
100 joining
well,
every
what
week.
I'm saying is,
Andrew-
is now that I feel as though there's a bit of traction,
Yeah,
I think it's
very
going
good.
to ramp up a bit more. I'm prepared to contribute.
The
a lot
thing
more
that
funds to
matters
it and-
about Strawman that I'm so pleased about is just the quality of the idea generation.
Yeah.
Idea generation is hard.
That's the
It's
whole
actually
point of it,
hard.
man. So I'm glad. I'm really
And
great
it's
to
hard
hear you
to
say that.
it's hard to come up with ideas that will help people rather than hurt people. You can never be right all the time. I know the pain of giving people a bad idea which they then act on. And that's true in any part of your life, but basically when your job is to try and give someone good ideas and you give them a bad idea, which does happen and has happened to me, you feel terrible, or I feel terrible.
Well-
the fact that you've got this new hive mind methodology that is like able to do that in a way that is positive is super
Do you
valuable.
know what? For me, I think what's been it was an idea that I feel as though it's been a bit validated. Is the trouble with normal sort of online discussions is it's just all noise and people shouting at each other, and there's
Yeah.
no
If you've ever
accountability
looked
and
at-
there's no transparency.
Yeah.
So at least the idea was just like it was a really risky thing. It's like let's like shine a bright spotlight on people's performance. And it's like what do you think, Mr. Know-it-all, Mr. Troll? What you tell me what stock to buy.
This was all a whole thing about getting back with the trolls.
It really is, and it's just
The revenge against
But
the
what's been
trolls.
great, I think, is when you do that, and when everyone's in the same situation, and when even the best of the best sort of members that we have there still make the occasional mistake, is that we're all in it together. It's a really collaborative
But it's really
environment.
the trolls are the promoters. That's
Yeah.
who you're holding to account. By having a scorecard, you don't allow someone to like come on and hype
Exactly.
something when they're always hyping crap.
You want to come on
Yeah.
and pump your penny dreadful? By all means,
But
do it.
then
my
you'll
friend,
have the
but you'll have a really
reputation
bad
that's
record.
that.
So,
Yeah.
yeah.
So then that there's actually a safer environment for people to read other people's opinions about stocks.
Put
than-
up or shut up, as I like to say.
Yeah. Anyway, so Matt,
Yeah.
what
Yeah.
are you thinking about it? What's the plans in the near to medium term?
What's next for me?
Yeah, so it could be some pretty exciting news in the next few months. I think.
Yeehaw!
Yeah,
You're
You're just going to leave it there, aren't you? You're just going to tease us.
But
Yeah, come on.
yeah, if you sign up to mattjoss.com, I'll keep you informed there, and I'll also be
I'll be
updating
in
on
the
a
front of
company
that
I've been
line.
researching over the last couple of months. Hopefully, if I can get it all together, so that'll be probably my next write up, as well as updating on inflection points, a lot of other stuff. But yeah, I hope to have a bit more news to share. And
you're
I'll absolutely.
I know a lot of people have been like waiting for more Matt Joss action, and I would suggest those people make sure that Matt has your email at this point in time.
It's pretty silly not
Appreciate
to do
it.
that. And the other thing too is we all like a bit of a tweet or two. So our email addresses are in the show notes. If you want to stay in touch, that's another great thing to
Absolutely.
do. But guys, I think
Yeah, that was
as
great.
the hour ticks over,
Absolutely.
That was a long one. Thank you for our remaining listener.
Who hasn't
do
passed
email
out
us.
drunk from all of the mentions. No, thanks very much. It's been really appreciated.
it really has. It's been great. And until next time.
Until next
Thanks for
time.
listening.
Hakuna Matata.